Hey, how's it going, everyone? Welcome to Finance with Avrin. In this video, I'm going to get into details about the Child Tax Credit Section 70104 and the Trump Accounts Section 70204 in the One Big Beautiful Bill that was signed into law on July 4th, 2025. And as per usual, this is going to be unbiased and not political, no drama, sticking to the information. First, starting up here with the Child Tax Credit. What's new? What stays the same, and who qualifies? Now, the child tax credit is not new. This is an extension of the child tax credit and an increase of it from $2,000 to $2,200. And now this credit will be indexed to inflation. So it adjusts automatically each year based on the cost of living. And check out that chart. We've definitely had our fair share of inflation in the past couple of years. It's cooling off some now. However, it could definitely heat back up. So having this indexed to inflation, you're likely going to see this credit increase over time. And now another thing stated for the child tax credit is that the children and taxpayer, at least one if filing jointly, must have a valid social security number to qualify. Households using the ITINs, individual taxpayer identification numbers, are no longer eligible. And the maximum refund limit of that $2,200 is stated as $1,400 cap in the bill. However, several sources are stating that for 2025, with adjusted for inflation, that cap is going to be at $1,700. The remaining amount, $800 if using the $1,400 or $500 if using the $1,700, is non-refundable and only helps if you owe taxes. And here soon in the video, I'm going to give you a mathematical breakdown of that and some examples. Let's move on to the next section though. Who qualifies in the income phase outs? Now, child eligibility criteria. This is for children under the age of 17 at the end of the tax year, and also U.S. citizens with a valid social security number, and the child must be claimed as a dependent. And now there are some phase outs for the child tax credit. If you're filing single or head of household, that phase out starts at $200,000. If you're filing married, filing jointly, that phase out starts at $400,000. And in terms of that phase out, how it's calculated is that the credit is reduced by $50 per $1,000 over the thresholds. So those are the thresholds right there: $200,000 for single head of household and $400,000 for married filing jointly. And now let's get into the mathematical equation of the child tax credit, refund, and earned income, starting with this example, and then I have some more examples after this. Now, the refund is calculated at 15% of earned income over $2,500. which is capped at $1,400 per child per the bill. However, when adjusted for inflation, and several resources are stating that this cap to be at $1,700 currently for 2025. Now here's the breakdown right here in the table and how it's calculated. Let's say earned income is $2,500 for the year 2025. Well, your refundable credit is going to be a zero. Now, if your earned income is $5,500, let's do the math on that. 5,500 minus 2,500 is 3,000 times 15%. That's going to equal $450. So $450 would be your refundable credit amount if your earned income was $5,500 in this scenario right here. Now, of course, we're going to get to higher earned income amounts because this is a really low amount. So this is showing you right here, of course, if you don't meet a certain earned income, you may not get any of the refundable credit, or you may get less than the cap of the refundable credit. Now, next example right here is the amount that you would need to reach to at least get that cap of $1,700. Now, if your earned income is $13,834 or more, then you would get that refundable credit of $1,700. That cap would be reached. Now, the math on that, we got the calculator right here. 13,834 minus 2,500 equals 11,334 times 0.15, 15% equals $1,700.10. So yeah, $1,700. Around right there, that amount right there is the cap, and that's how much earned income you would have to at least have or greater than to get that cap. That maximum amount, $1,700. Now, so as stated right there, you must have at least $2,500 in earned income to qualify. That $1,400 cap stated in the bill is adjusted for inflation in sync with the total credit. So the total credit of that $2,200. Per multiple resources, this. I'm just popping them up on the screen so you see I'm not just saying that, I'm showing you this. Per multiple resources, the cap for a 2025 tax year will be $1,700. The remaining portion is non-refundable and only benefits those who own tax. So if you owe some in taxes, then the rest of that amount, $2,200 minus $1,700, $500 will go towards that. If you don't owe anything else on tax, that means you're not going to get that full $2,200, but you could get that $1,700, depending on other scenarios, of course. Now, taxes, I'm not going to get into all the specifics. So you got different variables and factors when it comes to taxes. So I'm just giving you an outline right here, but let's get into some more examples. First tip here, we have a family of 4. John and Cortana are married, filing jointly with 2 children aged 5 and 8. Their combined modified adjusted gross income, MAGI, is $100,000. Since their income is below the $400,000 threshold for joint filers in that phase out, they qualify for the full $2,200 per child, resulting in a total credit of $4,400, $4,400. Scenario 1 right there. Now, scenario 2. Freya is a single parent filing head of household with 1 child aged 4. Freya's modified adjusted gross income is $40,000. With that $40,000, she qualifies for the full $2,200 credit. All right, those are 2 scenarios right there. I got 2 more for you. Scenario number 3. Joel, a single father with 2 children aged 5 and 8. Filing head of household, Joel's modified adjusted gross income is $25,000. Joel qualifies for the maximum refundable portion, that additional child tax credit of $1,700 per child, totaling $3,400. So I'm going to pop it up here on the screen and show you the math on this. $25,000 minus $2,500 equals $22,500 times 0.15%. That's going to be $3,375. So Joel would be able to qualify for the maximum refundable portion of $1,700 per child, totaling $3,400. This credit is pretty much like, okay, if you don't make enough, then you won't get the credit. That $2,500. If you make a little bit above that, but not over a certain amount, then you get a partial amount of the credit. Well, if you make over a certain amount, and depending on how many kids, then you can get the full credit. So there's a few factors that goes along with this. Now, scenario number 4, Nathan and Elena are married, filing jointly with 2 children aged 11 and 15. Their combined modified adjusted gross income is $410,000. So the scenario with them is that their adjusted gross income is above that $400,000 threshold for the phase out for married filing jointly. So the credit is going to be reduced by $50 for every $1,000 over the limit, resulting in a reduction of $500. So that's that $10,000 above the limit divided by 1,000 times 50 equals 500. So they will receive a reduced credit of $3,900. So that 2 children, $4,400 minus $500. So their reduced credit is going to be $3,900 after that phase out. Now that was some info on the child tax credit along with some examples. Now let's get into some information about the Trump account. Now this is a new specialized pilot program IRA individual retirement account designed for individuals under 18 years old. Now, while this is similar to a Roth IRA in some ways, like with the after-tax contributions from individuals and some tax-free distributions, which I'll get more into that a little bit later in the video, the bill explicitly states that this is not a Roth IRA. It's treated more like a hybrid type of traditional IRA with unique rules. Now, if a Trump account has not been established for a child by a parent, it will be created. However, you don't have to use this account. If you're just someone who's like, I don't want to have anything to do with this account with my child or anything like that, you don't have to use it. So that's another thing. They're not going to make you like contribute to it. Or when I say they, I mean the government or presidents or whoever. Nobody's going to like make you or force you to contribute to this account for your child or anything like that. So this is just something that'll be set up for you basically if you don't set it up yourself. There's still some questions unanswered about this account. It's like I said, it's something new. It's a hybrid type of account. So there's going to be more information given out, throughout the year, I'm sure, and definitely next year when people start, filing their taxes and these accounts start appearing and everything. Now, one of the penalties that could be associated with this Trump account is that there could be a penalty of $500 or $1,000 to individuals who makes an account election for a child who is not an eligible child of the taxpayer. And so with the breakdown of the penalty, it's going to be $500 for negligence or disregard of the rules and regulations, or $1,000 if it was determined to be caused by fraud. Now, who is eligible for the Trump account? For eligible children born between January 1st, 2025 and December 31st, 2028. Those are the children that will have this Trump account. So if you have a child, if you already had a child born in 2025, then they will be eligible for the Trump account. If you have a child later on in 2025 or in 2026 or 2027 or 2028, then they could be eligible for the Trump account. Now, another rule for eligibility is that the child must be a U.S. citizen and have a valid social security number issued before account establishment. So those are the two main criteria right there for eligibility for the Trump account. Could this get extended? Of course, it could get extended by the next president. And they could, I don't know, I guess they could rename it. I'm not sure exactly if this is going to be like called a Trump account in the bank that is held, or they're just going to call it an IRA and then just have something else associated with it. Like I say, as more information rolls out about this and these accounts actually start popping up, we'll see it, specifically how it's going to look. But that's eligibility right there. Now, funding and contributions. There's going to be a one-time $1,000 payment deposited by the government directly into each Trump account. So not just $1,000 per family. If you have a kid in 2025, a kid in 2026, a kid in 2027, a kid in 2028, there's going to be $1,000 for each one of them in their own individual Trump account, individual retirement account. So that one-time $1,000 payment is for each child, not like per family, anything like that, not per filer, not joint of household. That doesn't matter. It doesn't matter if you're filing single, head of household, married, filing jointly. $1,000 will be deposited for each eligible child by the government. Now, this $1,000 does not count towards the annual contribution limits from individuals or employers. Now, contributing to a Trump account. Individuals can contribute to this. Parents, guardians, and others can contribute to this. Employers can contribute to this on behalf of an employee or their dependent. So your employee can contribute to this Trump account for your child. Once the child gets a certain age and starts working themselves, their employer can contribute to this account. Now, other entities can contribute to this account as well, like government entities and qualified organizations like nonprofits. They, get a grant or something like that. You can have some involvement, some volunteer, something going on where they're like, hey, we want to give you some money. They can have that money go into their Trump account. So various people, companies, entities can contribute to these Trump account on behalf of the child. It's just for the child who has the account. This isn't for the parent of the child. This is for the child of the account. Now, in regards to when I say you, I mean like you as in the parent. This isn't for you. This isn't tied to your individual retirement account, or your Roth IRA, your traditional IRA, anything like that. This is separate from that. So when it comes to contributing, it doesn't go towards your max for your IRA or anything like that. It's not combined. This is separate. Now, contribution start date. The contributions cannot be accepted before 12 months after the bill's enactment date. So there's kind of like a block off of contributions for a little while right here. And then the contributions could pretty much start. Now, when I'm speaking of the maximums and everything, the limits, let's get into that. Contribution limit, up to $5,000 per year before the beneficiary, the child, turns 18. Now, this limit will be adjusted for inflation after 2027. Now, the no tax deduction situation. Individual contributions are made with after-tax dollars. No deduction on your income tax. Now, there could be tax-free employer contributions. Amounts paid by an employer up to $2,500 annually are excluded from the employee's gross income. This limit adjusts for inflation after 2027. So if you have it set up where your employer is going to contribute to this account, that's going to be excluded from your gross income. So that's a different type of tax scenario. Your contributions after tax dollars. Your employer's contributions will be tax-free, so they will not be taxed. A little bit different scenario right there. Now, tax-free government and qualified general contributions. The initial $1,000 from the government that they deposit into the account. Now, there's tax-free government and qualified general contributions. The initial $1,000 that the government deposits into the Trump account and any qualified general contributions are not included in the beneficiary's gross income. Now, the beneficiary in this situation is the child for whom the Trump account is set up for. So different scenarios right there when it comes to taxes involvement with the contributions, depending on who makes them, basically. This is a new account. There's various factors and situations going on with this account. Let's get into more info about it here, though. So, investment options. This isn't just some account that you could just invest whatever in anything you want to. There are some rules to what you can invest in with this Trump account. Now, the funds in this account can only be invested in eligible investments until the beneficiary, the child, turns 18. Eligible investments are defined in the bill as mutual funds or exchange traded funds, ETFs, that track a qualified index, like the S&P, like the NASDAQ tracks an index. Those are indexes. So something that tracks indexes, we'll say, are typically considered more safer type of investments. However, the funds in this account cannot be in a mutual fund or exchange traded fund that uses leverage. You can't have one of those 5X, 3X, triple QQQ, type of ETFs in your Trump account. The funds can't go towards that. Also, the ETF or mutual funds in this Trump account cannot have annual fees or expense ratios more than 0.1% of the investment balance. So qualified index examples, something like the S&P stock market index, an ETF like the SPY or the VOO, or other broad indexes, which are comprised of equity investments in primarily United States companies. They're kind of limiting in a sense of where the funds can be invested in this account, more like kind of safer investments, less risk, but that's not to say that these funds don't grow. Okay, like there's the SPY. Yeah, there's VOO. Yeah, these grow as well, just a little bit safer than some of the other funds out there. A lot of people are investing in these, of course, so it's nothing like new or that different. Now, let's get into also distributions and rollovers. When can the money be taken out, this Trump account? Generally not until age 18. The money in the Trump account is designed to grow as a long-term type of investment. That's what one of the main goals of this account is. It's not something to say like, okay, here's $1,000 for the account, you can contribute to it, your kid can take it out when they're 10, 16, 5, something like that. This is considered like an individual retirement account. This is what this account is more like. It's not just like an individual stock, investment account or something like that. It's not like a savings account, checking account, or something like that. This is like one of the long-term type of investment accounts is what it's molded as. Now, the first day that you can generally take out money, this account is going to be the first day of the calendar year that you turn 18. And in this situation, when I'm saying you, I mean you as in the child, the beneficiary of the account. So what the person can do with the money and when they can access it. The bill does not restrict what you can use the money for once you access it at age 18. It's treated like a regular investment account, specifically a traditional IRA, for how you can manage and use the funds. So if you're familiar with how traditional IRA works, how it looks, in Vanguard, Fidelity, Schwab, the different financial institutions that you can have a traditional IRA in, then you kind of get an idea of how this is going to look and how it's going to be handled and things. For a traditional IRA, of course, there's penalties involved for early withdrawal, things like that. But if you use the funds for certain things that fall into, like higher education, college tuition, or buying your first home, things like that, then there's some leeway in terms of, the penalties and things like that. So this could fall into that because they're definitely molding this more as kind of like a traditional IRA type of hybrid account. Now, rollovers, if you want to switch where your Trump account is held, like from one bank to another, you could do a direct transfer to another Trump account, in another financial institution. However, the entire balance must be moved. So you can't say I'm going to split this account into another Trump account and another financial institution in half or something like that. The whole amount of the account has to be moved if you want to move where it's located. Now you can also transfer the funds from the Trump account to an ABLE account, ABLE standing for Achieving a Better Life Experience. So when the child turns 17 of age, the entire balance can be moved directly to an ABLE account. Now, these accounts are typically for individuals with disabilities. If you're familiar with these accounts, do you understand like, hey, this is something that could be an option for when the child turns 18. You just roll it over into that ABLE account. So now let's get into taxes and penalties. Trump accounts are officially treated like traditional IRAs for tax purposes, is what I'm gathering from this bill. Like I stated, however, this is a new type of account. Things could change. There could be amendments to this bill. More information can roll out or some things get treated a little differently. However, this is what I'm gathering right here from the research of the actual bill and valid sources. So what gets taxed? Your contributions. So any money contributed, like the parents' yearly contributions to the account that was already taxed and not used as a deduction will not be taxed when it's distributed. So when the money is withdrawn from the account, when it's distributed from the account, your contributions to the account that you've made that were already taxed, they're not going to be taxed again. Now, government money and earnings, the initial $1,000 that the government deposits in, any employer contributions, other special contributions, and all investment earnings, growth from the stocks, the ETFs, the mutual funds, dividends, all of that will be taxed when you take them out. So when you have the distributions from the account, that portion of it will be taxed because those amounts were not taxed. The $1,000 from the government, the employer contributions, and other special contributions, from other entities that weren't taxed, those will be taxed when they're distributed, that part of the account. And also all investment earnings. So all the growth that happened in the account from the investments in the account and the dividends, that will be taxed. Now, this taxable portion is generally treated as ordinary income like your regular wages. Now, are there penalties for early withdrawals, like after 18, before retirement? Yes, usually. With it being similar to a traditional IRA, if you take out the taxable portion of money before retirement age, there's typically an extra 10% penalty fee on top of the regular income tax. Now, I'm basing this off of traditional IRAs because that's what this account is seeming more like. Basically, it's not a Roth IRA. They make that specifically clear. They make it clear in the bill that this Trump account is like an individual retirement account. However, it's not a Roth individual retirement account. Now, penalty exceptions, that 10% penalty can be waived if the money is used for certain specific reasons, like with the traditional IRA. For example, the qualified education expenses, tuition, fees, books, something towards a first-time home purchase, certain unreimbursed medical expenses, disability, certain things that traditional IRAs have the penalty waived for. The Trump account could have those same stipulations as well. Now, even if you avoid the 10% penalty for those reasons, the money that is considered taxable earnings, the earnings and the government employer contributions, is still subject to your regular income tax. So with the Trump account being treated like a traditional IRA individual retirement account, that's an overview right there of information in regards to taxes and penalties for contributions and distributions. And now that is it with my video on the child tax credit and Trump accounts. Be sure to like the video down below if you enjoyed it, even if you're a fan or not a fan of the bill or child tax credit or Trump accounts. If you like the information, how it's presented, things like that in the video, leave a like down below and subscribe to the channel if you're not already. Definitely helps the channel. Much appreciated to anybody and everybody that's done any of that on any videos on my channel, comments, all of that. Much appreciated. Hope you all enjoyed the video. Take care.